California's leadership is under fire, literally and figuratively. From devastating wildfires like the Pacific Palisades blaze to a crumbling homeowners insurance market, Californians are feeling the burn of poor public policies and weak leadership under Governor Gavin Newsom. Meanwhile, across the country, Florida's Governor Ron DeSantis and President-elect Trump is setting a different tone in handling emergencies and safeguarding his state's economy and the entire country. But here's the kicker. The impact of California's crisis isn't staying within its borders. Insurance premiums are set to rise nationwide, and millions of Californians are fleeing the Golden State, reshaping the demographics of key states like Texas, Florida, Arizona, and Nevada. If you're wondering what these trends mean for your wallet, your insurance, and the future of our country, stay tuned. This episode will break down the stark differences in leadership, the economic fallout, and why what's happening in California could be coming to your doorstep sooner than you think. Let's get this episode started in 3, 2, 1. Let's go.
Let's get this money. Yours dollar bills getting this on Let's get this money. 1 year and better know I'm on it.
What's cracking, everybody? Money Smart Guy, Matt Sapaula here, hailing to you from Dallas, Texas. And prayers and thoughts are out to our friends and fellow citizens in California. Let's unpack this, get this started. I was talking to my friend Brendan Ayenbadejo, and I was viewing his IG stories, communicating with him and sending him my support. And he was coming out of the house. He says, okay, my family and kids are all safe. We just been told we have to evacuate. I grabbed everything from my house that I think that is irreplaceable. My Super Bowl helmets, Super Bowl rings, et cetera, et cetera. And I'm looking at my house right now. I'm thinking to myself, I've been here since 2018. And this might be the last time I see my house. That's it. And so let's go into many of these different areas of devastation of these wildfires and this impact, not only families, our states, and our country. Let's unpack the first one. Financial devastation of the Pacific Palisades wildfires. Early estimates by JP Morgan suggest the total economic damage from the fires could exceed $50 billion, potentially make it one of the costliest natural disasters in U.S. history. This includes $10 to $20 billion in insured losses in the Pacific Palisades area alone. Now, here's the thing. AccuWeather's latest estimate is even more startling. The firm now anticipates $150 billion in damages. That's massive. Over 2,000 structures were destroyed by the fires, with the Palisades fire alone consuming more than 17,200 acres. So just to give you some comparison, remember Camp Fire in Northern California? Well, Camp Fire in 2018 destroyed 19,000 structures, insured losses of $15 billion, and displaced 50,000 people in Northern California. Hurricane Milton on the East Coast impacted 150,000 structures, estimated insured losses of $50 billion. And for their troubles, citizens there got a $750 government check to help them in this emergency. So I'm unpacking which insurance companies, because rumor has it, or in fact have it, the insurance companies and many homeowners in California don't have any homeowners insurance at all, or homeowners insurance prices skyrocketed in the last 3 or 4 years to and through this pandemic. For example, these are the listed companies canceling or limiting insurance policies in California. They are State Farm, Travelers, Tokyo Marine Holdings, Nationwide, Farmers, USAA, Allstate, and Chubb. Let me give you some examples of what they're doing in terms of canceling or limiting insurance policies in California. Let's take a look at State Farm. They stopped accepting new homeowners insurance applications in May of 2023 due to rapidly growing catastrophic exposure. Non-renewals announced in March 2024 that they would not renew approximately 72,000 policies in California, affecting 30,000 homeowners and 42,000 commercial apartment policyholders. This represents about 2% of the policy count in California. Now, what's the impact in Pacific Palisades? Before the Palisades fire, State Farm dropped insurance coverage for about 1,600 homes in the area, particularly those high wildfire risk. Let's take a look at Nationwide. Nationwide, their new policies were halted in December 23, meaning that subsidiary Crestbrook Insurance Company, Nationwide stopped writing new homeowners insurance policies in California in December 2023. Announced in February 2024 that they would not renew any homeowners insurance policies by June 15, 2025. Farmers, they issued a policy cap. Initially capped the number of new homeowners insurance policies at 7,000 per month in 2023, later increasing this to 9,500. They also temporarily paused new condo and renters insurance policies, but have since begun to cautiously enter these markets. USAA, predominantly with the veteran market. A lot of veterans in California. From 2023, USAA only allowed new homeowners insurance policies for properties with a wildfire risk score 1 out of 32, significantly limiting new business in high-risk areas. What about Allstate? You're in good hands. Policy pause with them. Allstate paused new homeowners, condo, and commercial insurance policies in California since November of 2022, citing the high cost of wildfire risks. They've indicated they might resume if there are any significant regulatory changes, those are policy changes, government policy changes, to reflect the cost of insuring in high-risk areas. In other words, Allstate's saying, listen, we'd love to get the business in California. We'd love to insure families in California. However, Governor Newsom, hello, LA Mayor, hello, people around these high-risk wildfire areas and the politicians and the mayors and the senators and Republicans that represent these areas. We want some specific regulatory changes, because if we issue these policies and some of these changes don't happen, then we're at risk of paying out a lot of claims. Now, I don't know if you know this, but insurance companies aren't in the business of issuing a lot of claims simultaneously. They're in the business of collecting your premiums for a minute, holding on those premiums for a minute, investing it collectively as a whole, and everybody else paying inside the insurance policies, and spewing out just a little bit of claims here and there. They're not supposed to be paying these claims in tranches like this. For example, Chubb, we're with Chubb Insurance. Chubb, in terms of what they adjusted in California, high-value home restrictions. In 2022, Chubb ceased offering insurance for high-value homes in areas with significant wildfire risk, focusing on reducing exposure to catastrophic losses. And so if you don't have insurance in California, or you've been restricted insurance in California, cannot obtain a policy in California, you've been told by your insurance company, you're no longer going to renew your policy, you got to find another insurance carrier. A couple of things. Number one, all the premiums that you paid into the insurance company, you don't get back. You've got nothing to show for. And you don't have a policy in force in case a fire like this happens. So what are the alternatives for people in California? Well, they have the FAIR plan, the state government-run California insurer of last resort. The purpose is to act as a safety net, providing basic fire insurance when private insurance refuse coverage due to high risk. The FAIR plan has seen a dramatic increase in policy numbers. I can't imagine. If the private policies have decreased what they're going to issue, in a publicly run insurance company like this is going to increase what they're going to take. They're taking a difference. Increased from 350 in 2020 to over 1,400 policies by 2024, which is roughly 9,000 total homes in the area. Statewide, the FAIR plan's policy count jumped from about 154,000 in 2019 to over 339,000 by the end of 2023, which means that people say, listen, we need fire insurance. We need homeowners insurance. We're in a high-risk area. If something happens to my house, we have to have the financial resources to rebuild. Everything that we've built, everything, equity, our property, our personal stuff that's inside this house, that things that can or cannot be replaced, we need to have an insurance policy just in case our house burns down so we can have the financial resources to rebuild. And so now these insurance companies are reducing or no longer renewing, reducing what they issue or not renewing what they currently have on the books. So who's got to make up the difference? The California government. Now, how many times do you feel good about a government running something that you need very closely serviced? I mean, how many times have you been to the DMV and you're very confident in how quickly the DMV is attentive and responsive to your needs? Anything that's government run, I have a hard time seeing the efficiency, and I have a hard time seeing the heart of anything that is run by the government. Now, give it to an insurance agent, give it to an insurance company. Some guys may say the same thing. Well, guess what? At least you have a agent or an agency or insurance company that's on the same side as you. They want to make money. You want to protect your assets. So in exchange for them giving you a policy, in exchange they accept your monthly premium. But now that's not happening in California. And so when you're looking at leadership, John Maxwell said something very profound many, many years ago that I picked up. It said, everything rises and falls on leadership. Well, let's look at LA. The LA Fire Department leadership. We're going to look at LA leadership, and then we'll look at California's governor leadership as compared to DeSantis in Florida, because these both guys in two different parts of the country deal with disasters. So let's look at LA Fire Department leadership. All of them, lesbians, named Kristen. Interesting. Kristen Crowley, first LGBTQ fire chief, LA Fire Department, salary $439,000. Christina Kepner, first lesbian assistant chief, LAFD, salary for $264,000 a year. Christine Larson, first black lesbian equity bureau chief, LAFD, salary $399,000. And these are due to what they call the DEI policy, diversity, equity, inclusion policies, where people were, what they call these woke policies, where we got to make sure that there's representation for that minorities, women, lesbian, African American, you name it, transgender, you name it. We want to make sure that they have roles in government, they have roles in companies. That's where all the whole DEI policy and ESG policies came in. And by the way, I started my career in insurance. Could care less about politics and policies and leadership. All I cared about was my own business. Then realized that leaders in our governments have so much power, even though they may not get getting paid more as you, but they have so much power to affect not only your lives, but so many other people's lives. And so I've got nothing against the lesbians here in charge of the LA Fire Department leadership, all named Christina. All my question is are they the right person for the job? I don't know why a equity bureau chief at LAFD needs to have a position in LA Fire Department leadership. For example, Kristen Crowley, fire chief, LA Fire Department. She has been noted for a commitment to creating an inclusive work environment, focusing on diversity, equity, inclusion inside the fire department. Became the first female fire marshal in Los Angeles in 2016, have been recognized for leadership during major events like Woosley Fire in 2018, featured on platforms like Kelly Clarkson Show for a groundbreaking role. Well, amen. However, operational focus in terms of being a fire chief ought to be at the top of your list, not diversity. Critics have pointed out that Crowley's leadership has prioritized diversity, equity, inclusion over operational readiness. Conservative commentator Megyn Kelly, for instance, stated in recent years, LA Fire Chief has made not filling the fire hydrant's top priority, but diversity. Diversity is least among the top priorities for the department. For example, in war, in combat, in the Army, in the Navy, in the Marines, in the Air Force, do we really care about diversity? No. Do we care about whether or not the brother or the sister to the right or to my left of me can fight a war? And not only fight the war, but win the war. In this case, do I want to make sure that the leader of the LA Fire Department can win the war against fire, not diversity? Can give a crap about diversity. Somebody asked me a long time ago, man, how come the Filipino community hasn't recognized you as one of the top Filipino entrepreneurs in America? I said, I don't care about being recognized by my Filipino community, my family community of being a top Filipino entrepreneur. I care about being a top entrepreneur. I'm good enough to be an entrepreneur, not Filipino entrepreneur. I'm good based on merit, or whether I'm good enough. Do I do the job? Do I communicate? Do I provide value? Do people listen to me? Are people's lives made different because of my involvement in their lives? Are people wealthier because of my involvement of them being our client in our insurance company? Are they better off after me than when they were before me? If so, then I deserve and have earned, possibly, the right to be called a difference maker. I don't feel entitled to it. I feel entitled to be a Filipino entrepreneur. I feel like I want to earn and get the stripes of being somebody known for my work, not because of my ethnic background or where I come from, but by the work that I do. Christina Kepner, Assistant Chief LAFD. Her criticism is her domestic violence allegations. Kepner was accused of domestic violence in high-profile incident, according to reports during a presentation of International Women's Day. There are questions about disturbing videos in an LAFD's possession showing Kepner making homicidal and suicidal threats during a violent attack of her then live-in domestic partner. You know what hits the fan? We have crazy relationships, okay? What about Christine Larson, Deputy Chief LAFD Equity and Human Resources Bureau? Her criticism is victim blaming. Larson faced significant backlash after a video resurfaced where she appeared to blame fire victims for their circumstances. She said, am I able to carry your husband out of a fire? He got himself in the wrong place if I have to carry him out. This quote was part of a broader discussion on the physical capabilities of firefighters, where she also mentioned, you want to see somebody that responds to your house, your emergency, whether it's a medical call or a fire call, that looks like you. It gives that person a little bit more ease, knowing that somebody might understand their situation better. What a bogus statement. I can give a shit whether or not somebody's trying to save my life, whether they're white, they're black, they're Latino, they're Asian, they're male, they're female, they're a veteran. I don't care. I care is, can they save my life to pull me out of a burning house? To save my kids because I don't have the equipment like you do. Can you take that equipment you have, that axe, that fire hose, the equipment you have, the oxygen tank, the mask? Can you go inside the house and save my family because I don't have the equipment to do so? And that's, by the way, where my that's where my tax dollars go to pay for instances like this when 911 is something of an emergency that I need help with. Do I care whether or not you look like me? I don't give a shit. I care about whether or not you can save my life and the people I love inside that house. And if you're white, you're black, or brown, and you do your job, God bless you. You'll be at my Christmas list. You'll be in my prayers. You'll be in my house. You'll be in my parties. You'll be in my barbecues. You'll be in my celebrations. You're my new homie. I don't care if they look like you. What? Question came out that water could not be found in the fire hydrants. Why? Operational challenges in infrastructure. The fire's intensity led to an unprecedented demand for water. Janice Quinones, CEO and chief engineer of the Los Angeles Department of Water and Power, stated the demand was 4 times greater than we've ever seen in the system. This resulted in the depletion of 3 large water tanks, each holding about 1 million gallons in the Pacific Palisades area. Water supply and pressure. The infrastructure was not prepared for such high demand, Quinones explained. Hydrants are designed for fighting fires at 1 or 2 houses at a time, not hundreds. What about maintenance? Here's the kicker. The St. Inez Reservoir, which could provide additional water, was out of service for maintenance, Quinones stated. The St. Inez Reservoir, which does provide water to the area, was offline due to scheduled maintenance. Listen, there's things that I was in charge of in the Marine Corps. One of them was fire bucket duty. As a crewman on a CH-46 helicopter, our job in both California and in Japan was to be on the ready in case a fire were to break out, so therefore we can put out the fire. Meaning that we had a fire bucket attached to the bottom of our helicopter. Time for us to take off. We go, lift up out of the airport, go to the ocean, drop that fire bucket in the ocean, 1,000 gallons to 2,000 gallons, take that to the fire site, strafe over the fire site with 1,000 gallons of water. Not a hard job. We do it constantly, right? 4 aircraft in constant rotation. Boom, boom, boom. That's called fire bucket duty. And so to not have and to be ready when the fire is at your doorstep, to not have water ready due to scheduled maintenance, how long does scheduled maintenance take to be down? And when you are down, you should have a backup that while you're on maintenance, you have a backup plan in case a fire were to break out right now, because the fire ain't breaking out around your maintenance schedule. Governor Gavin Newsom's statements. He responded by ordering an investigation into the water supply issues. He said, while water supplies from local fire hydrants are not designed to extinguish fires over large areas, losing supplies from fire hydrants likely impaired the effort to protect some homes in evacuation corridors. We need answers to how that happened. Newsom would also address the political rhetoric, particularly from Trump, stating, people are literally fleeing. People have lost their lives, kids lost their schools, families complete torn asunder, churches burned down, and this guy wants to politicize it. I have a lot of thoughts, and I know what I want to say, but I won't. President-elect Donald Trump's statements blame on Newsom. Trump took to Truth Social to criticize Newsom, claiming Governor Gavin Newsom refused to sign the water restoration declaration put before him that would have allowed millions of gallons of water from excess rain and snow melt from the north to flow daily into many parts of California, including the areas that are currently burning in a virtually apocalyptic way. He wanted to protect an essentially worthless fish called a smelt by giving it less water. It didn't work, but it didn't care about the people of California. Now the ultimate price is being paid. I will demand that this incompetent government allow beautiful, clean, fresh water to flow into California. He is to blame for this. On top of all that, no water fire hydrants, not firefighting planes. In addition to that, FEMA and Biden was criticized by Trump, saying no water in the fire hydrants, no money in FEMA. This is what Joe Biden's leaving me. Thanks, Joe. So just to give you some numbers here of tanks depleted, all 3 1 million water tanks in Pacific Palisades went dry by 3 a.m. on January 8, 2025, after firefighting efforts started the previous day. So in less than 1 day, no water. 1 day, no water. And your job is to protect the citizens and homeowners and property owners and citizens of your city and state. Hydrants Day, approximately 20% of the fire hydrants in the area report to have no water or low pressure. Water delivery. To compensate the water, the city deployed 140 water tender trucks to assist in fighting the fires. And LA Mayor Karen Bass mentioned that the city was using tanks typically reserved for construction to supply water to the fire department. Trump's claiming that FEMA funds was countered by facts indicating that FEMA had about $27 billion in disaster relief fund after a $29 billion addition in December 2024. So here's some misconception though versus reality. Take this information and gather it and figure out what it is that you believe and do some more research after hearing this statement. Here's a misconception. The narrative pushed by some, notably President-elect Trump, was that Governor Gavin Newsom prioritized environmental conservation over public safety by diverting water meant for firefighting to protect an endangered fish, the Delta smelt. Trump stated on Truth Social, Governor Newsom, okay? He wanted to protect an essentially worthless fish called a smelt. Here's the reality. The actual reason for the water shortage during the fires was not due to water being diverted to save fish, but due to operational limits and design of the urban water system. Well, listen, if fires of this magnitude break out, and it always does, it's not like it's a once in a generation thing, it's an every year thing. Don't you think you should invest in building into the infrastructure to make sure water flows. Now, the demand for water during the firefighting efforts was limited and approximately 4 times greater than the system was designed to handle. Infrastructure maintenance, the St. Inez Reservoir could have helped. They couldn't replenish its tanks fast enough. So here's a policy on water diversion. The policy regarding water diversion for environmental reasons, particularly for the Delta smelt, pertains to long-term water management strategy in Northern California and does not directly influence the immediate water supply for urban firefighting in Los Angeles. The Delta smelt apparently is up north, right? The Delta smelt issue is about water flow regulation for Sacramento, San Joaquin Delta, which is not directly connected to the water supply for Los Angeles. These regulations are part of a broader environmental protection laws, not decisions made on the day of or during the wildfires. Now, here's the official response. Newsom office refuted Trump's claims with communications director Izzy Garden stating, "There's no such document as a water restoration declaration. This is pure fiction. The governor is focused on protecting people, not playing politics, and making sure firefighters have all the resources they need." Which leads me to my next point, my next thought, area of question. How many policies, I don't know, since 2018, since before the pandemic, have put in place to make sure that people in California are safe, that insurance companies are confident in issuing policies and people can raise their families with safety and are confident in building their families and building their businesses and careers, etc. Well, how many was created for brush clearing, fire prevention versus illegal immigration? So if you add up 2018, 2024, 25, $11.7 billion was allocated for fire prevention, ranging from resilience programs, the general fund over 2 years for fire prevention, wildfire protection, healthy forest and fire prevention programs, greenhouse gas reduction fund, et cetera, et cetera. However, $2.6 billion was also used for spending on immigrations and woke initiatives. In 2024, California budgeted approximately $2.6 billion for expansion of Medi-Cal to cover undocumented immigrants, illegal immigrants, I should say, reflecting a significant portion of healthcare spending under social services. So after these fires, where do you think a lot of these folks left to? Are they staying there? Or are they leaving? What do you think? Infrastructure. Over the last few years, California has seen significant investments in infrastructure. For example, projects like the Salton Sea Management and water recycling received funding, though exact annual figures vary. For instance, in 2023, there was a reduction of $119 million from previous commitments due to budget constraints. Transportation has committed billions to transportation projects, including high-speed rail to bridge repairs, but these are generally funded through bonds or federal contributions rather than state general fund allocations. So here's some trends. Budget and funding details. California Fire's wildfire protection budget grew significantly with a sharp uptick under Newsom, $1.1 billion in 2014 to $3 billion in 2023. Also under Gavin Newsom's leadership, the budget doubled from $2 billion in 18 to $3.8 billion in 24-25. Personnel at California Fire increased from 5,829 to 10,741 in personnel between 2018 and 2024. Here's the thing though. 2024-25 budget cuts. In June 2024, Newsom signed a budget reducing wildfire and forest resilience funding by $101 million. So even though there's an increase in personnel, there's also a decrease in funding. So the question I would ask if I was in California, where's the money going? Where's your state income tax going? $5 million reduction for Cal Fire fire reduction teams, $4 million reduction for Forest and Legacy Program, $28 million from State Conservancy for Wildfire Resilience Funds, $12 million reduction for Home Hardening Pilot Scheme, $8 million reduction for monitoring and researching wildfire resilience, $3 million reduction from an interagency forest data hub. All cut, all money cut. And at the California state level, these are all the California state level legislative acts since 2018. At least 24 significant legislative acts has been passed since 2014 directly addressing wildfire prevention, with many more amendments to existing law. Same thing too with LA. There are at least 5 to 10 new or amended fire prevention ordinances per year alongside regular updates to the city's fire code. So how come none of these things were working? If so much work had been done, how come none of these things were working? And the question is, let's say your house burned down. Oh, where you live burns down, your identity, where you anchored down to raise your family, where you went to school, where you went to church, where you ran your business, where you had a job, all wiped out, all burned down. So my question is, what percentage of homeowners in LA and California do not have homeowners insurance any longer on their homes due to property and casualty insurance companies no longer issuing policies or not renewing them? A 2023 estimate from the Insurance Information Institute indicated that 12% of U.S. homeowners lacked insurance in 2022, up from 5% in 2019. In 24 in California, 5% of California homeowners were uninsured. They had a house, no homeowners insurance. In other words, they probably get some form of forced placed insurance by the bank. if they had a mortgage on it or they went to the FAIR plan. Los Angeles specifics are, in terms of percentage of homeowners, for instance, in July 2024, State Farm canceled 70% of its policies in the Pacific Palisades area due to wildfire risks. Seriously? In July 2024, 5 months before this wildfire breaks out, State Farm canceled 70% of its policies in the Pacific Palisades area. Interesting. Fill in the blank there. By the way, what are you thinking right now when you hear that statement? Put it in the comment section below. So now let's say you got to rebuild. You don't want to leave California. You want to rebuild. Okay, a couple things. Number one, do you have the financial resources to rebuild your house? And by the way, in Pacific Palisades, the average home was $3.1 million. Let me repeat that one more time. The average home in the Pacific Palisades was $3.1 million. So let's say you have the money to rebuild your house. I don't know what it takes to build a house in California. Let's say $800,000, $1 million to build a house in California, let alone the land, another maybe $700,000 for the land. So you're $2 million in, okay? Let's say you got the cash, because you're definitely not getting the cash from the insurance companies. So let's say you got the cash. How many, by the way, right there alone, how many people have the cash to rebuild their homes? Not a lot of people, because most people don't buy their homes cash. They finance it. They buy $1 million house, 20% down, whatever the case may be. Majority of a person's home ownership is mortgaged. So do you have the difference to rebuild your house? So let's say you do. Let's say on the flip side, let's say you do. Let's say you got the cash, okay? Amen to that. In order for you to get a permit issued in LA to build a home, for example, simple projects, less complex projects like minor home additions or single family home renovations, the permit issuance can take anywhere from 2 to 6 months. What? 2 to 6 months. So compared to Dallas, Texas, you want to know the standard in Texas? If you want to get a permit issued to get your home addition done, it takes a day. That's right. 1 day right here. Take a look at this. 1 day to issue a policy in Dallas, Texas, not 2 to 6 months in Los Angeles. What about complex projects like building a house? Well, that requires a 2 to 4 week initial review. And this process, including revisions, additional department reviews, like environmental and utility approvals, and final issuance can extend from 4 to 12 months. 4 to 12 months. So you're waiting 4 to 12 months for a permit to allow you to build a house again on where you used to live. Do you know what it is in Dallas, Texas? Here you go. Drum roll, please. To get a permit to build a house, complex project, 1 to 3 days. 1 to 3 days, not 4 to 12 months. What is going on in California? What is going on with the bureaucracy that people cannot get a permit to build on a home that they own? Wait times, some posts on X, some users in Los Angeles have reported wait times for 3 months. The entire process, including multiple rounds of correction, might take 6 months to a year. Crazy to take that long. Okay, so where are you going to live? So let's say you got the cash. It takes you a year to rebuild. It takes you probably another year to build that house because you're not living in a construction zone. So where are you living? That's a double expense. So you took your whole life savings to rebuild back your house again. Took a year for you to get a permit issued. Where are you living? And then by the time you get to break ground, where are you living then? So at least 2, maybe 3 years out before you rebuild back in Pacific Palisades, which leads me to my next thought. Where are people going to go? If people don't have the money to do that, where are people going to go? Some thoughts here. We did some research. Where are people going? Top destinations for Californians, 4 to 5 states. At the top of the list, Texas, consistently a leading choice. Texas attracted nearly 94,000 Californians between 2022 and 2023. Although this represents a decline from over 102,000 in the previous year, Texas remains a primary destination. Arizona, approximately 54,000 Californians moved to Arizona during the same period, drawn by its lower cost of living and housing affordability. Next couple states, Nevada and Washington. Each state welcomed over 40,000 former California residents, offering more affordable living conditions and, in some cases, proximity to California. Florida, around 39,000 Californians relocated to Florida between 22 and 23, a decrease from 50,700 in the year prior, yet it remains a notable destination. So between 23 and 24, California experienced at least a net loss of 293,575 residents to other states, the largest in the nation during that period. Already, where do you think is going to happen now after this? In 23, California's inbound migration was 41%, while outbound migration stood at 58.9%, indicating a significant net outflow of residents. Do you know what happens when people are no longer living there? Well, from a political standpoint, you lose your tax base and your voter base. You lose jobs, you lose businesses, you lose people buying things in the community, you lose tax revenue. People aren't buying gas in your city and state no more. They're in Texas. They're buying gas there and they're paying sales tax over there. They get employed over there. They pay homeowners insurance over there because now they can get it. Homeowners tax. They're replacing what they did in California in another state. So in other words, California, bye-bye, these people aren't coming back. And for a governor, that's bad news. So are these insurance companies really hurting? Let's take a look. We did some research. Let's take a look. In the first half of 2023, the U.S. property and casualty insurance reported direct premiums written of approximately $478 billion, an increase from $434 billion in the same period in 2022. Net premiums written were $423.9, up $9.2 million from $388.6 billion in 2022. The industry recorded a $22 billion underwriting loss during the period, the largest mid-year loss since 2011, indicating that claims and expenses exceeded premiums collected. So these insurance companies are showing with their transparency, we're paying out in more claims than we're actually collecting in net revenue. They're hemorrhaging money. Give you a couple examples. State Farm Property and Casualty Group reported earned premiums of $87.6 billion in 23, an increase over the previous year. However, the company incurred an underwriting loss of $14.1 billion, slightly higher than 2022. This is attributed to elevated claims severity and significant catastrophic activity in both auto and homeowners insurance lines. American Family Insurance. The company faced record high catastrophe claims of $3.5 billion due to multiple severe weather events. The combined ratio for all property and casualty lines was 110.8%, slightly improved from 111.4% in 2022, indicating the company paid out $1.11 in claims and expense for every dollar earned in premium. So this is another example of an insurance company hemorrhaging cash. They're taking in insurance because they're paying out more in claims. So the general trends in 2024, based on the U.S. Bureau of Labor Statistics data released in March 24, car insurance premiums nationally increased about 20% compared to the previous year. This is one of the highest annual increases in recent history, 20%. A report from J.D. Power in 2024 suggested that the industry as a whole was experiencing a combined ratio well over 100%, indicating losses for insurers. By the way, anytime there's a ratio of 100%, means they're basically what they're pulling in, they're paying out. If it's over 100%, they're paying out more than what they're pulling in. This pressure has led to expectations of premium increases across various lines of insurance. For example, here's how it now affects your pocketbook. National projections, for example, Progressive Insurance forecasted in 2024 financial outlook that premiums might need to rise by an additional 5 to 10% across the board to account for increased claims and inflation and repair costs. So not only are they paying for catastrophes, but because of high inflation, the higher cost of wood, steel, nails, you name it, construction workers' salaries. Because it's costlier now to get the raw materials and to employ the construction workers, these insurance companies have to account for that. So now they have to charge higher premiums to everybody across the board because insurance companies just can't go to you individually. They got to do it across the board. The Insurance Information Institute indicate that due to factors like inflation, increased natural disasters, and social inflation. What's social inflation? Rising claim costs due to legal and societal factors. How about crime? Premiums could increase an average of 8 to 15% for both auto and home insurance over the next couple years. What are some of these special factors influencing increases in premiums? 4 of them. Natural disasters. Number 2, inflation. Number 3, social inflation. Again, let me break that one down. This includes higher jury awards, increased litigation costs, and a general rise in the cost of claims due to societal changes in how damages are assessed. Regulatory environment is influencing increases. In some states, regulatory bodies might approve or mandate rate increases to ensure insurers remain solvent. What happens if these insurance companies go out of business? Is that a good thing or is it a bad thing? Put it in the comment section. Do you think that insurance companies going out of business, going insolvent, is good or bad? Let me share with you my opinion. It's bad. Here's why. Many of you like leverage. I like leverage too. For example, in order for you, like I was sharing before, in order for you to buy $1 million house, you leverage a bank. Bank puts up a majority of the cash. You put in this down payment, and based on this down payment and your credit score and your ability to repay that loan, this bank will buy that house with a difference. So you come up with $200,000. The bank comes with $800,000. You're using leverage as an example. Well, I like leverage too as well. I like paying $50, $100, $150 to an insurance company so they can pay me hundreds of thousands of dollars in case a claim that I bought the insurance policy for comes into a reality. I like paying $100, $150, $200 for a car insurance policy that if I get into an accident and it costs me $5,000, $10,000, $20,000, or to fully replace my car altogether, I'm glad I was paying pennies on a dollar to pay off my car note and get me another one. I like insurance. In my opinion, it's the highest form of leverage. And I don't want this leverage to be lost. Many of you guys poo-poo insurance companies. Well, a lot of insurance companies do a lot of social good. for our society. They create a lot of jobs. The largest purchaser of bonds in the stock market are the insurance companies because they have to provide safety and security for the portfolio and the reserves to show the regulators that if claims were to rise, they can afford to pay the claims. So let's look at some state-specific examples. In California, given the focus on wildfires, some insurers have either pulled back from offering policies or have significantly increased rates. Homeowners insurance policy in fire-prone areas might see hikes in the range of 20 to 30% or more in some cases. Florida, similar pressure from hurricanes lead to similar or even higher premium increases, especially for auto and home insurance, where increases of 50 to 25% are not uncommon. What about nationwide? For states less affected by natural disasters, the increases might be more moderate, but still significant, averaging around 5 to 10% for the year. So yes, what's going on in California, what's going on in Florida, what's going across the country affects you in terms of your insurance premium rates. So bottom line, everybody brace for impact. Your premium rates are going up. So while exact figures can differ, insurance premiums across the country are projected to grow based on higher claims of these insurance companies. So when you're thinking about your prayers and condolences and support, what's going on in California is affecting a lot of people here around the country. From a higher cost of insurance standpoint, affordability standpoint, migration from people relocating from California to Texas, Arizona, Idaho, Washington, Oregon, Florida, you name it. And that's just one state. Guess what? Another state is losing a lot of citizens. Where I'm from, Chicago. Bad public policies out there are making it unbearable to live in from a cost of living standpoint and also from a safety standpoint. Big reason why my wife and I are here is because in our insurance agency, we lost 2 of our insurance agents due to gun violence in Chicago. They were carjacked for their cars. So a lot of people in Chicago aren't feeling safe. My friends in New York don't feel safe. But guess what? People in the States, my sister relocated from Woodland Hills and went to Nashville, Tennessee. And by the way, I'm going to wrap up here just seeing some of these videos of people being affected because we can talk about facts and figures, but Bill, this hits home. So Philly here, a team member, shared with me this video. And could this possibly be the guy that set the wildfire? Is this possibly an arsonist that's adding to the fires in LA? Interesting videos. Let's take a look at what's going on here. Just crazy to see these fires just taking over neighborhoods after somebody started a fire to see what now this done take over the whole city. It's crazy. And again, this is the reason, and looters and crime now is coming. This is and then, of course, these homeowners insurance policies, these property and casualty insurance policies that people have, guess what they're going to do? Of course, going to file a claim with the insurance company. This is the reason why these insurance companies don't want to do business in California, because they caught a guy and they don't have enough probable cause. They don't give any confidence saying, listen, we're going to be monitoring him to make sure he doesn't do anything crazy. Neighbors are saying this guy's kind of off, but just let him go. Who's to say that later on that night, he drives off somewhere and starts another fire in another city? And speaking of which, here's a couple of videos here of people who have actually been displaced and what their reactions are now after knowing that what their home is all burned down. Let's take a look at this.
Homeless.
Oh, she's trying to smile through that pain. Whole house.
Our childhood. For real. It's so good. This is my whole life. I know, it's all good. Both of our lives. We lived here our whole lives. You can see what's left of my daughter's car seat. Cleanest it's ever been.
She's trying to smile through the pain, laugh.
There's nothing.
The pain. Horrible. Wow. But these real issues that people are contending with, and that's why I pray as you watch this channel, the 7-Figure Squad, that you focus on the times that you have on your side, that you focus on a revenue source and building a cash flow source, obviously using the insurance companies as much as you can, but make sure you protect your cash flow, your income. Own that, protect that. You are your greatest insurance policy. And one of the greatest insurance policies you can have is to make sure you control your income. Because when push comes to shove and you use that income to buy certain things to put you in the right position to have confidence and clarity when devastation comes your way. And this is the reason why people have vaults, people have emergency kits, people have contingency plans in case something like this would happen. Wildfires are going to happen every year. Sadly, it's going to happen again next year. Hurricanes are going to happen on the East Coast. Year after year is going to happen. People are going to be displaced. People are going to lose. Fires are going to be set. Sad part, I hope with policies like this guy who's walking around with the blowtorch, has no social awareness, what that signifies to everybody in that place. Some knucklehead that nobody's paying attention to can go to a brush area, set a brush on fire, embers fly over the place, catch fires all over the place. They still, the whole thing goes up, and these embers fly to neighborhoods and catch the dry brush around the house and eventually sets the house on fire. It's not good. So if you're going to be displaced with some cash, some money, some financial resources. In the meantime, use those financial resources to prepare some contingencies. So therefore, you can move with confidence, clarity. You can move smooth, and you're confident. Prepare for the worst, but expect the best. God bless LA, and prayers for California, and God bless America. Please put your biggest takeaway in the comment section below, and please subscribe and stay posted to our next episode here on a channel dedicated to help you think like a millionaire, strategize like a millionaire, so therefore you can be a first-generation cash flow millionaire. From Dallas, Texas, I'm your Money Smart guy. And until we meet again, continue to live smart, continue to love smart, and be money smart today.